Welcome to Planning for Retirement Plans. This video will provide you with information to assist you in planning for your retirement.
Members of the Employees Retirement System, or ERS, are participants in a defined benefit plan. Your annuity, or pension benefit, is based on a formula. The formula is made up of three components: your retirement group and the rules for that group. Each group has a different percentage that will be used in the retirement calculation. Average final earnings, which will be discussed later in more detail, and credited service, which includes your years of participation in the retirement plan, plus your sick leave balance at retirement and transfers or purchases. What is your retirement group? Your retirement group is determined by several factors, such as whether or not you are a bargaining unit member, or if you are in a public safety or non-public safety position. Your retirement group is also determined by your retirement plan enrollment date. If you enrolled prior to July 1st, 1978, you are a member of the optional plan. Your retirement code will consist of a letter and then the number 0. If you enrolled prior to July 1st, 1978 and elected to integrate, you are a member of the optional integrated plan. Your retirement code will consist of a letter and then the letter Z. If you enrolled on or after July 1st, 1978, you are a member of the mandatory integrated plan. Your retirement code will consist of a letter and then the letter K. You can locate your retirement group code on your biweekly pay slip. Average final earnings, or AFE. For members of the optional or optional integrated plans, your AFE is calculated by looking at your highest consecutive 12 months of earnings. For members of the mandatory integrated plan, your AFE is calculated by looking at your highest consecutive 36 months of earnings and then dividing by 3. The AFE period may or may not be the most recent 12 or 36 months just prior to retirement. The final component of your retirement calculation is credited service. Credited service consists of your membership in the ERS. Full-time and part-time members receive year-for-year credit. For members with both full-time and part-time membership, your credited service is determined by the number of hours you worked each fiscal year. Periods of leave without pay while you were not contributing to the ERS are not included in your credited service. Also included in your credited service would be any transferred service, any purchased service, and sick leave balances at retirement up to a maximum of 2 years. The next slide will show you the sick leave credit conversion chart. Sick leave credit. The following chart shows the minimum number of sick leave hours at retirement you would need for each month of additional credited service. You would need at least 88 hours for 1 month of sick leave credited service. After the first month, you would need an additional 176 hours for each month of credited service. You may use up to 4,136 hours to obtain the maximum amount of sick leave credited service. Any sick leave hours in excess of the minimums shown in the chart are either forfeited or rolled to a union sick leave bank if eligible. Normal retirement. Your normal retirement date is based on 3 components: your retirement group, your age, and your credited service. Each retirement group has different requirements for normal retirement. Please refer to the chart for the minimum age and service requirements. Your normal retirement would be whichever of the two requirements you meet first. Please note that members with combined full-time and part-time service will use total years of membership service. Also note that if you are in Group H and a member of the SLT bargaining unit or are in the Police Telecommunicator Occupational Class Series, you are eligible for normal retirement with 30 years of credited service and are at least age 50 versus age 55. Early retirement. As noted in the previous slide, each retirement group has different requirements for normal and early retirement. You may be eligible to apply for an early retirement if you meet the minimum requirements as listed in this chart. Early retirement reductions or penalties will be discussed on the next slide. For members of groups A or H, if your age plus service equals 85 or greater, you may elect an early retirement without a reduction in benefits. Please note that you must first have at least 35 years of credited service. Early retirement reductions. This chart shows a summary of the early retirement reductions. You may be eligible to retire up to 10 years early. Early retirement reductions are based on the number of months or years you retire early. For example, if you elect to retire 1 year early, your benefit would be reduced by 2%. If you elect to retire 6 months early, your benefit would only be reduced by 1%. The early retirement reductions will remain in place for the lifetime of your benefit payment. Benefit reductions. This only impacts members of the optional integrated and mandatory integrated plans who will have a reduction in benefits at your Social Security normal retirement or SSNRA date. Based on the year of your birth, your county benefit will reduce at either age 65, 66, or 67. Please note that your SSNRA may or may not be the same age that you can collect full Social Security benefits from the federal government. Contact the Social Security Administration to determine your eligibility to collect Social Security. Payment options. All payment options provide you, the retiree, with a monthly benefit or pension payment for your lifetime. The amount you receive each month can increase or decrease based on what you provide to a beneficiary or if you elect one of the Social Security adjustment options. Each payment option will be discussed in more detail on the following slides. As a reminder, the date you begin receiving Social Security has no effect on your ERS retirement benefit. Payment options. There are several different payment options that you may elect when you retire. The payment option you elect at retirement is a one-time, irrevocable election. Once you retire, you cannot change your payment option. In subsequent slides, we will discuss each of the payment options and provide a sample retirement calculation. Sample retirement calculation. The employee used in this sample retirement calculation will be retiring December 1st at age 57 on a normal retirement and is a member of the HK retirement group. The average final earnings are $62,397.12, which is an average of this employee's highest 36 months of earnings. Also shown on this slide are the employee's pre-tax and post-tax contributions and the interest that has been earned on those contributions. We will refer to the total of $58,910.57 in regard to possible benefits payable to a beneficiary should you pass away. The Modified Cash Refund, or MCR option. This payment option is based on a single payment for the retiree's life, only for members of the Mandatory Integrated Plan. If you elect this payment option, you will receive a monthly benefit or pension payment for your lifetime. If you die after receiving pension payment equal to or exceeding your total contribution and interest, no additional benefits will be paid to your beneficiary. Benefits will go to a beneficiary only if you have not exhausted your contributions and interest. A beneficiary can be any person or entity. Your beneficiary can be changed at any time. This is the normal payment option for members of the Mandatory Integrated Plan. Sample MCR Annuity Plan. This example shows an employee's benefit under the MCR option. This retiree would receive $3,015.86 effective December 1st. The amount is determined by multiplying 2% times the AFE times the years of credited service and then divided by 12. When the retiree reaches age 67, the Social Security normal retirement age, the monthly benefit will reduce to $1,884.91. This amount is determined by multiplying 1.25% times the AFE times the years of credited service and then divided by 12. In this example, the benefit will reduce by 37.5%. The percentage of the reduction may be different for each retiree based on varying factors such as your retirement group and the amount of your average final earnings. Each month the retiree receives a payment, the total contributions and interest are reduced. In this example, the total contributions and interest will be exhausted in just over 19 months. The retiree will receive a lifetime benefit. However, only if he or she dies within the first 19 months of retirement would a beneficiary receive a benefit. The 10-year certain and continuous, or 10-year CNC option. This payment option is based on a payment for the retiree's life only for members of the optional and optional integrated plans. If you elect this payment option, you will receive a monthly benefit or pension payment for your lifetime. The benefit guarantee is that at least 120 payments will be made from the date of your retirement. The 120 payments will be made to either you or your named beneficiary. If you die prior to receiving 120 payments, your beneficiary will receive the remaining payments. A beneficiary can be any person or entity. Your beneficiary can be changed at any time. This is the normal payment option for members of the optional and optional integrated plans. Sample 10-year CNC option. This sample shows that the retiree would receive $2,862.58 each month, and at age 67, the benefit would reduce to $1,789.11. Note that the retiree receives a slightly lower benefit, $2,862.58 a month, versus the $3,015.86 in the MCR option, because the guarantee period is longer. In this example, the payment guarantee is through November 1st, 2025 versus June 2017 for the MCR as shown in the previous slide. The Joint and Survivor or J&S annuity option. Again, you receive a monthly benefit or pension payment for your lifetime. You would elect a percentage of your monthly benefit, anywhere from 20% to 100%, to be provided to your named joint annuitant should you die. Your joint annuitant's benefit would reduce when you would have reached your Social Security normal retirement age. If your joint annuitant dies before you, your payments remain the same. Your joint annuitant would receive a lifetime benefit based on the percentage you elect when you retire. Joint and Survivor J&S annuity option. You must name your joint annuitant at retirement, and you cannot change this election even if you divorce or remarry or your joint annuitant dies before you. You may only elect a spouse, domestic partner, or child as your joint annuitant. Sample J&S annuity option. The sample shows the monthly benefit the retiree would receive based on the percentage elected at the time of retirement. It also shows the amount the joint annuitant would receive should the retiree die. Compared to the MCR option, where the retiree would receive $3,015.86 and a reduced amount of $1,884.91, if the retiree elected the 50% J&S option, they would receive $2,733.69 until age 67, and then the benefit would reduce to $1,708.55. If the retiree died, the joint annuitant would receive half of what the retiree was receiving. In this example, the joint annuitant would receive $1,366.85, and then the benefit would reduce to $854.28. This sample is using the factors based on the spouse's date of birth. The factors used to calculate this benefit will be different for each person based on how old they are when they retire and the age of the joint annuitant. Joint and Survivor annuity, pop-up option. The Joint and Survivor annuity with pop-up option is similar to the previous payment option where you receive a monthly benefit for your lifetime, and you elect the percentage of your monthly pension that your joint annuitant would receive if you die. The difference is that if you divorce, or the domestic partnership is dissolved, or if your joint annuitant dies before you, your monthly benefit will pop up to the MCR payment amount plus any COLAs that have been paid since retirement. Sample J&S annuity with pop-up option. The sample shows the monthly benefit the retiree would receive based on the percentage elected at the time of retirement. It also shows the amount the joint annuitant would receive should the retiree die. Compared to the MCR option, where the retiree would receive $3,015.86 and a reduced amount of $1,884.91, if the retiree elected the 50% J&S pop-up option, they would receive $2,665.70 until age 67, and then the benefit would reduce to $1,666.06. Also, compared to the previous slide, if the retiree elected the 50% J&S option without the pop-up, they would receive $2,733.69 versus the $2,665.70 until age 67, and then at age 65 would receive $1,708.55 versus the $1,666.06. If the retiree dies prior to the joint annuitant would receive half of what the retiree was receiving. In this example, the joint annuitant would receive $1,332.85, and then the benefit would reduce to $833.03. If the joint annuitants die before the retiree, or they divorce or dissolve their domestic partnership, the retiree would pop up to the MCR amount, which in this example would be $3,015.86 until age 67, and then $1,884.91 at or after age 67. This sample is using the factors based on the retiree's and joint annuitant's date of birth. The factors used to calculate this benefit will be different for each person based on how they are when they retire and the age of the joint annuitant. The Social Security Adjustment Option, or SSAO. This option is a variation of your single life annuity amount and may give you a larger initial monthly benefit until age 62 or age 65 as you elect, and smaller monthly payments thereafter. The intention is to provide you with a nearly level total income from the plan and Social Security from the date of your retirement until the date of your death. At your death, payment will continue to your beneficiary if the guarantee provided for under your normal payment option form has not been exhausted. When and if you collect Social Security does not impact your pension from the county. With this option, you are electing to change the date in which your monthly retirement benefit reduces. Sample SSAO. The sample shows the monthly benefit the retiree would receive based on electing to have their benefit reduce at age 62 or age 65. For the SSAO at age 62 option, the retiree would receive $3,868.95 each month, and then the benefit would reduce at age 62 to $2,141.95. The sample also shows that at age 62, it is estimated that the retiree would receive approximately $1,727 from Social Security. Remember that the reduction is occurring at age 62 instead of age 67, and the county benefit will reduce regardless of whether the retiree actually begins collecting Social Security or not. Also, shown on the slide are the figures for the SSAO at 65 option. Social Security Adjustment Option with Joint and Survivor Annuity Option. This is a combination of the Social Security Adjustment Options and the Joint and Survivor Annuity Options. This option will typically give you a larger monthly benefit than under the Joint and Survivor Annuity Option until age 62 or age 65, as you elect, and smaller payments thereafter. This is intended to provide you with a nearly level total income from the plan and Social Security from retirement until death, while still providing a lifetime benefit to your joint annuitant in a percentage that you determine when you retire. If your joint annuitant dies before you, your payments remain the same. If you divorce or dissolve your domestic partnership, the joint annuitant you elected at retirement cannot be changed. Sample SSAO with J and S. The sample shows the monthly benefit the retiree would receive based on electing to have their benefit reduce at age 62 or age 65, and to provide a percentage, which is elected at the time of retirement, of their monthly benefit to a joint annuitant should they die. For the SSAO at age 62 option, combined with the 50% joint and survivor option, the retiree would receive $3,652.50 each month, and then the benefit would reduce at age 62 to $1,925.50. You can compare the dollar amount to the MCR option, where the retiree would receive $3,015.86, and a reduced amount of $1,884.91 at age 67. Remember that the reduction under this sample will occur at age 62 or age 65 instead of age 67, and the county benefit will reduce regardless of whether the retiree actually begins collecting Social Security or not. A unique feature to this payment option is that the amount payable to a joint annuitant remains constant and does not reduce at any age. Cost of living adjustment, COLA. The cost of living adjustment, or COLA, is based on the change in the Consumer Price Index for the Baltimore, Washington, D.C. metro area for May of one year to May of the next year. The COLA is calculated annually and applied to your monthly benefit July 1st of each year. Note that the COLA can be a positive or negative adjustment. Members of the optional or optional integrated plans can receive 100% of the COLA for service prior to June 30th, 2011, and there is a 2.5% COLA maximum for service after June 30th, 2011. For service prior to June 30th, 2011, members of the mandatory integrated plan can receive 100% of the COLA up to the first 3%, and then 60% of any change greater than 3%. The increase cannot exceed 7.5%. For service after June 30th, 2011, there is a 2.5% COLA maximum. COLA applies to both the initial retirement amount and the reduced amount that you will receive on the date your benefit is reduced. Resources. You can run your own retirement estimates via the online pension estimator. You just log on to the e-portal using your county username and password and choose the PeopleSoft Pension Administration option. After that, you click on Self-Service, Benefits Information, and then Pension Estimates. You can enter the first of the month in which you plan to retire as your retirement date. The system does take into account your current sick leave balance when providing the estimate. Additional plan information and forms can be located at www.montgomerycountymd.gov/retirement. Retirement deductions. The following 5 items may be deducted from your monthly pension. Federal taxes. This link may assist you in determining the approximate dollar amount of your federal tax deduction. Maryland state taxes. Maryland requires that you provide a flat dollar amount to have taken from your pension. This link may assist you in determining the amount of Maryland taxes you want withheld. Health and life insurance premiums. Retiree insurance is administered by the Office of Human Resources Health and Welfare Team. Additional information can be located on the OHR website. Child support. If you have a current child support order on file with county payroll, you will need to have a new order issued to the Montgomery County Employee Retirement Plans. The order must be submitted when you retire. Tax liens. Any tax liens will be deducted from your pension check.
The purpose of this presentation is to provide employees with an informal guide to the key provisions of the Employees Retirement System, Montgomery County Code, Chapter 33, Article 3. Every effort has been made to accurately summarize your retirement plan in this presentation. However, you are cautioned that this summary may not reflect all of the provisions of the Employees Retirement System. The provisions of the Employees Retirement System will govern in the event there is an inconsistency or any ambiguity. Montgomery County reserves the right to change or discontinue any of the terms of the Employees Retirement System at any time, subject to applicable laws and collective bargaining agreements.